How important is a good manager? Value investing is often associated with numbers, price-to-earnings ratios, future free cash flows, dividends, and the like. But the father of value investing, Benjaham Graham, once reminded investors that not all aspects of a company can be quantified. He said, "You cannot make a quantitative deduction to allow for an unscrupulous management. The only way to deal with such situations is to avoid them." What does he mean by this? First, companies with an ethical leadership are more likely to retain top talent. Employees today seek more than just a paycheck. They want to work for companies that align with their values. They want to work in an environment that fosters trust, respect, and fairness. Unscrupulous management can damage this environment, leading to high employee turnover, low morale, and, ultimately, decreased productivity. Remember, a company is only as good as the people behind it. Furthermore, ethical leadership is often a signal of sustainable business practices, which can lead to less risk. Unscrupulous management might achieve short-term gains through unfair practices, but these are unlikely to sustain in the long term. They risk damaging the company's reputation, losing customer trust, facing regulatory penalties, and even legal consequences. One recent example is Shein, which has been shown to utilize abusive labor practices and non-sustainable environmental procedures, which has impacted the customer base harshly. All these factors can significantly impact a company's profitability and potential for growth. Moreover, unscrupulous management is a red flag for investors. It can cause uncertainty, unnecessary risks, and a lack of confidence in the company's future, factors that are key considerations to the principles of value investing. As Graham suggests, the best way for investors to deal with such companies is simply to avoid them. So while numbers are important in value investing, they don't tell the full story. A company's leadership and its ethical standards play a crucial role in its ability to succeed in the long term, retain talent, and be a profitable investment. As investors aiming for financial independence, it's important to remember Graham's advice and consider the qualitative aspects of a company, such as the integrity of its management. After all, investing is not just about finding companies that are good with numbers, but also those that are good in character.